Let's take another look at how the currency markets are doing. Euro dollar is sitting around the 150 mark at 150.26 and still gaining. And that dollar is sitting right on the 91 handle against the Japanese yen. Let's bring in John Kyriakopoulos, Head of Currency Strategy at NAB Global Markets Research, joining us here in our Sydney studio. I want to focus in on the euro dollar here, John. We're certainly not hearing much jawboning from European politicians at the 150 handle, but if we get up towards 155, which I guess, if the dollar keeps on weakening, is not beyond impossibility, how many of those European politicians are going to be picking up the phone to the ECB and the Fed and saying, what on earth is going on here? Do something about it.
I think there's going to be a whole boatload of them doing just that. To be honest, you actually did have quite a strong protest, admittedly from an aide to President Sarkozy a day or so ago when he described the euro getting to 150 as being a disaster for European manufacturing. So I think the interesting thing...
as they would say in French.
The interesting thing was that it really didn't stop the euro from then trading above 150 and actually remaining there today, as you suggested.
So that means, where do we go from here? Do you think that this jawboning or, commentary about it being a disaster is actually going to have any impact?
To be honest, I don't think it's going to have much of an impact. I think the reality is that a weaker US dollar is going to continue. It's in the interests of reducing those global imbalances. I think we might see some pressure from Eurozone officials on China towards the end of the year to allow the Chinese currency to start to appreciate again. That obviously hasn't happened now for over a year, and that might take some pressure off the euro in terms of a trade-weighted basis. But in terms of the euro against the US dollar, I think that the pressure is going to continue for further increases.
John, if we see a 9% read in the GDP figure from China later on today, possibly even stronger than that, then is there more upside momentum for the Aussie dollar?
Look, I think that's a very good point. Obviously, overnight we saw a bit of a setback in terms of the US stock market falling quite sharply into the close. Having said that, we haven't seen a great deal of fallout for those riskier currencies, although the Australian dollar is clearly off the high that it traded overnight. So we really need to see some more good news on Asia, and China is obviously very important in that regard, given that the region is leading the global recovery, and the Reserve Bank has described the recovery in China as being very important. We know that, for example, spot iron ore prices are up about 47% since March, and that's a key export for Australia. So I think if we print at 9% or better, I think that's going to support the Australian dollar. And I think the interesting thing is that I don't think the recovery in China is over. The fourth quarter growth could get back to double digits, and that could really light a fuse under the Australian dollar, which we now think is actually heading towards parity, probably by March of next year.
That said, John, a lot of the Aussie dollar bulls are saying that you can still buy the Aussie on the dips. So what would constitute a good entry point for you?
Well, somewhere around 150 basis points below where we are at the moment. But I think the reality is that if you're looking for bigger dips than that, you're unlikely to get them, and there's several reasons for that. Obviously, the fundamental outlook's still very good, with the Australian economy looking to get back to trend growth next year and above trend growth in 2011. The China story that you've described, the fact that the RBA is now hiking interest rates and will be taking rates back to sort of a more neutral setting, just above 5%. Within the next 12 to 18 months. That all to me says that pullbacks will be very limited. So if you do even see small pullbacks, you should take the opportunity and buy the A dollar.
I wanted to ask you a little bit more about what's going on with the Chinese yuan. You mentioned, of course, the possibility of it being revalued, or at least allowed to appreciate at a faster pace, because it's becoming more and more unsustainable to keeping it at such low levels when we're going to get a print of like 8.9% on GDP, as you mentioned, possibly even double digits. I mean, they just can't justify it anymore, can they? Realistically, what time frame would you bet on them letting the yuan appreciate more?
Bear in mind that we're still seeing consumer prices in China falling, and I think the CPI today for September will confirm that. So until we start to see prices rising again in China and the global recovery, particularly in the G7 economies, start to take hold, I think policymakers will be a little bit reticent to let the currency appreciate right now. So I'm thinking more the first quarter of 2010 is when China will start to resume currency appreciation, and it'll probably be at modest for that first year, probably 3 to 5% over a 12-month period.
It certainly is very modest, isn't it? Thank you very much for joining us once again. John Kyriakopoulos joining us from the NAB.